ready for 2026. Let's ride this bull all year long.
Welcome everyone to the new Trade Picks. We have a name change incoming. We haven't done it yet, but we are about to do that in YouTube's. We're dropping the C in Picks and going to PIKS. This will be done soon in the month of January. And we just want to let folks know ahead of time how they can locate our channel. The reason we're changing is this will help us align the Trade Picks, the new Trade Picks name, with tradepicks.com, which is a domain that we have gone ahead and purchased. And though there's nothing there yet, a website is incoming. And that's just to increase the marketing for our channel, and to again record our journey as we continue through these day trading days. We've also designed a new logo, and I'll give you a brief preview here. This is our new Trade Picks logo, and we've also come up with a new disclaimer. And the new disclaimer is a lot shorter, and we'll be putting that on all the videos going forward so we can eliminate the ticker tape, which probably drives people mad and is not very likable. For those of you new to the channel, or even returning visitors, you know that we have a strategy. Day trading is something that we got to take it slow with, especially in training. We have to have a strategy, and sticking with it is important. When we get FOMO, where our emotions begin to take over and we start making mistakes, we have to stick with the technicals and remove our emotions and our feelings from trades, because they don't make us any money. We need to make sure that the stock picks that we are looking at are moving, are candidates to help us to the upside to make money. Otherwise, we drop them. We have to look at support and resistance on the daily, the 5 and the 15 minute, and mark them out, so that when we're trading on the 1 minute or the 10-second chart, we know what to expect. We know where it's going to go up, where it's going to come down, what channel it's trading in. And the last and most important thing is, let the trade come to you. Once you've picked you've made your picks, put them in a watch list, watch them, see which ones start to turn green, which ones start to move, go to it. You have everything else in place, and you will know whether that's a trade that's carrying momentum for you to jump in, and not the other way around. If you have to hunt for stocks and for scanners and for gappers, then it's not worth trading. Break even is not trading, and that doesn't risk any money. You're home free. So at the start of 2025, we had some very bad 5 months, and by summer we were trading a little better. By August, we had our first winning month, albeit small, $122 of 2025. And then in October, November, we faltered, especially around the holidays, Thanksgiving. And December was a lot better. We almost could have pulled it out green, but we didn't. But it was only bad by $122 if you don't count the $115 from December 1st that were actually attributed to a trade that we took at the end of December and didn't sell it until at the end of November, I'm sorry. And then we bought it on Black Friday and couldn't sell it on Black Friday, so we wind up taking a losing trade on December 1st. The other things that we learned was that the MACD is very, very important. If you take a trade when the MACD is negative, look, chances are your trade is going to be red and a loser. Tall green candles, they drive FOMO. Your emotions become involved the second that you see a green candle moving up and you want to jump in. It's like driving a car. You see something in front of you, you want to stop, you want to slam on the brakes. The same thing happens when you see those green tall candle bars. You have to train yourself to look away from the tall green candle bars and look at all your indicators and make sure that in your hand you can have 5 indicators, or 1, 2, 3, 4, or however you want, but make sure that checklist is ready and to the upside before you jump into a trade. Holding past your stop is really bad. So if you go into a trade and you have a stop, and then thinking that the stock is going to make it and wishing and hoping, not going to cut it. You got to cut your losers quickly, and if you can before your stop, do it. There's just no point in staying in a bad trade. The worst thing than that is not having a stop. Because if you don't have a stop, you don't know where he's going to stop. What are you going to do? Let a stock go to zero? Let it go into bankruptcy and hope that when it comes out of bankruptcy that you get a share of the money because you own some stock? It's not going to happen. So cut your losers. Feelings and emotions have no value in the stock market. That is absolutely true. I have a feeling that this stock is going to go up. I think that this stock is going to... Those, forget about them. You may call it intuition. You want to call it whatever you want. They're your emotions. And human emotions are not going to cut it with the algos that are running the stock market. You have to have technicals. So stick to that. Win-loss ratio based on the number of trades doesn't matter, right? So I could take 10 trades. 9 of them are losers and 1 is a winner. So my ratio is, 10%? Lousy, right? But concentrate on the average amount won or lost. So if those 10 trades, I lose $1 each on the average, that's a loss of $10. But on the one winner, I make $20. Guess what? I'm a winner. So don't concentrate too much on that win-loss ratio and the number of trades. Concentrate on making your winners larger than your losers. And then having a good win-loss ratio on the number of rates. It can be anywhere between 40 to 50%. 60 to 80 is huge. 100 impossible. But if you concentrate on the dollar amount, you are going to be better off. So what can we look forward to in 2026? What are the things that are important to look at, especially for new traders and even intermediate traders or those that are in the red? Some of the things I've already spoken about. Making sure you trade with the MACD positive, get your emotions out of the room while you're trading. Those are highly important. If you can start with one of those, little by little, you can get a handle on most of them. And it takes time. And if it's going to take money as well, then you don't want to lose a lot of it. Trade with one share and use stocks that are below $4. That way your losses won't amount to a whole lot. There will be losses, but you'll begin to trade. And know that it may take months or even years for you to trade. So I've been doing this since May of 2024. A loss of $400 in 2025 and 24 wasn't too bad. But 2025, I've lost, in the first 5 months, I lost 5 times what I lost in 2024 before I finally stopped bleeding and have continued. I've still been losing, but it hasn't been that serious. And one of the things that I look at is if I were to pay a broker on a monthly basis, if I pay fees for my trades, if I then have to sign up for a trade reporting software, and then I need whatever else, I need a scanner, so I pay for that. All those services could amount to $200, $250 a month. If I wanted to pay somebody to teach me, and some of the courses that are out there range between $3,000 to $10,000 depending on where you go, right? Something in person in your home city is going to take a lot more money. If you don't live near a large city where those classes take, you have to book a hotel, book a flight, for a seminar, 2-3 day seminar. You're going to be paying a whole lot of money. So I haven't lost close to the amount of money that those folks are paying. But am I being lucky? Am I being smart? That I don't know yet. I have to look for 2026. I need 2026 to be profitable for me to say this is worth continuing and a great challenge. The money I've lost so far is the cost of admission. So it isn't too bad. I think the last time I checked, the average was $144 a month, and that's what I would be paying for services anyway. So I like the broker that I'm with. I'm not totally in love with it. I'm not happy with some of its features. And I may very well be looking for another broker. If I start making money and I start making enough money to pay the monthly charges for somebody else and with someone else and the fees, I may go ahead and do that. But only after I am profitable. You can't jump in with all the tools, bells, and whistles, pay those fees on a monthly basis, and then only make $20 a day, $19 a day, or then lose 20 or $100 a day. It's not sustainable. You might as well just get out, go get a regular job and do that. Trade within your time. Scheduled, right? So me, for example, I hate getting up early in the morning, and I'm on the West Coast. So in order to be right up with the market, with pre-market in the East Coast, which is 7 a.m., I have to get up at 3:30 in the morning, which is a hell of a lot early. And I do better at sleeping. My body, my health-wise, does better from 3:30 in the morning to 11 a.m. I discovered that after I stopped working. I didn't have to work mornings, found out my metabolism burns fat at a higher rate between 5 a.m. and 11 a.m. I could lose 4 pounds in that period on a daily basis. That's incredible. But because I'm trading, I'm not losing, right? You have to go to the gym. You have to do some exercise. But the point is, it is in my schedule, so you have to adjust to it. And you have to make it a schedule from a starting time to an end time. And then you have to choose your trades. And you also have to be fully awake, rested, and well suited for the mental challenge that the market's going to take. If you have a little cold, if you've been sick, if you've been up the night before, you were at a party or somewhere, don't even bother turning on the computer. Okay, it's not worth it. I've been groggy sometimes. Some mornings come and sit down, and the numbers are just whizzing past me, and I think I'm clicking right, but I'm not. So if you're not in a great mental state the morning that you wake up to get to the market, just don't do it. Just don't do it. Again, I'm going to repeat this over and over for 2026. A no trade day is a very good day for risk management because you lose zero. You don't lose any money. So keep that in mind. If you think you're going to lose money, if you're not feeling well, don't trade. That's the way to do it. The other portion of it is this up and down market with a lot of indecision, with a lot of big players pulling their money out of the market, gold and silver going up, and folks not investing money, not putting money in. It leaves the very retail consumer who's, the little guys who have less than 25 grand to trade with, to carry the bulk of the volume of the liquidity that's in the market. And that makes it dangerous for all of us. So don't go into dangerous situations. And if you do, be very careful, be extra careful. I remember the fog of war, right? So when soldiers are training, they are trained to imagine wherever they're behind a wall or a building, their blind sides, because they can't see certain places. So you could have sharpshooters up in the high up that are shooting them down. And what you need to do is concentrate on that fog of war so that you always have a shield. You're always behind a shield, so you're not going to get shot. The same thing is with the stock market. It is volatile. It is dangerous. And if you get right in front of it, it'll run you over like a truck. You'll be a deer in the headlights. And the stock market truck is rolling down the line, and the media saying how well the stock market is doing. In the meantime, you're crying about how low your account is. That's going to happen. So better to train, get on the simulator. The simulator isn't as good as real-time life, but it is something. It gets you to know the software. It gets you to know the environment. It gets you to know how to respond. Once you're in the real market, use only one share to trade. That's very important. And trade with stocks that are lower, stocks that you can afford to lose. Another thing I learned is don't set a goal for the day. Oh, I need $100 a day. I need $50 a day. As long as you have a goal, if you lose $50 in your first two trades, you're going to continue trying to trade to earn those $50 plus the other $50 that your goal is. And you keep trading and you keep spiraling down if you're having a bad day or if the market is not there to give it to you. So don't have a goal. Have an open mind that, yes, you're stepping up to the market. Yes, your objective is to make money. And yes, you're going to trade in order to do that. But the way to do that is to take the good trades. And if you take a good trade, the trade doesn't necessarily have to have a large return. You know, they talk about return on investment. And what is a return on an investment? Well, you take a monetary value, you put it someplace, and you're expecting to get your full money back plus some extra, right? So you lend some money out somewhere under a contract, you charge interest, you get that money paid back, and you get the interest. But some folks don't have an idea of what an investment is. I'll give you an example. Years ago, this guy at work, coworker, is talking to another coworker, and I overheard him say this, and he says to the other guy, "Yeah, my wife's car was getting old, and we just bought a new car, and we think it's a good investment." And I'm thinking to myself, I didn't say this to him, but I said, it's the concept that people think that putting money into something is a good investment. That's not absolutely true. A car, the minute you take it off the lot, you're going to lose money, right? So because it becomes a used car. So you go out, you buy a car, no matter how expensive it is, the minute you drive it out, and let's say, even if there is a grace period for you to return it and get your money back, let's say it doesn't happen. Let's say it's 6 months down the road. What happens? You want to try to sell it? You're not going to get the price you paid for it, right? Plus, you got insurance, you got all of those things to pay with. There's no return on investment there. So it's not an investment. It's an expense. It's something that you'll never get it back. So the same thing happens in the stock market. If you want to invest money to get money back, you have to do it correctly. You have to have all the tools in place. You have to have learned. You have to know the indicators. You have to know the software. And you have to be familiar with the stocks that you're trading and the behavior of the stock market. And for that, I would say you have to be at the market at least 2-3 times a week. And to stay in touch. You don't have to necessarily trade. I sometimes won't trade, and I look at the market and I still look at it. Other times I don't even turn on the computer. What I do is I watch the other YouTube guys and see what they did. And then I some do well, others do badly. Some days they do great and I do bad. Other days I see them all do badly and I do very small wins, but I do okay. And so it varies from day to day. And the way we see the stock charts, the way we see the market, it's different for us. So if you want that money that you want to trade into the stock market as a day trader to become an investment, that you're going to get a return out, you're going to first have to deal with all of the red that comes along with it, all of the learning that comes with it, and all the hard work that you have to put into it before you can get that return on your investment. And there might be a chance that you may never get it, and at which point you have to decide, well, maybe this is not for me. And I'm talking about day trading. Swing trading is a whole different manner. Long trading is a whole different manner. I'm not talking about holding, Nvidia, Amazon, Apple for long periods of times. We might all do that, but the I say the excitement of day trading is different, right? Because with swing trading and long trading especially, not much you can do. You buy Nvidia today at 180 and it goes down to 177 by next week, you're not going to turn around and sell it because it's a long-term investment. Same thing with crypto. Crypto is another thing that drives people crazy. And we've seen what has happened with crypto recently. So what can we expect out of the market in 2026? I think that it's still a question mark. I think we have to take it day by day. And until we see a real bull market, we have to be very careful, choose small sizes, choose your stocks very carefully, and trade less. Because you will get more money out of doing those things as opposed to the other way around. Jumping in with everything in your account onto one stock that could potentially earn you a whole bunch of money is not going to happen. And once the market does straighten out, if we ever get that golden age promised of the stock of the economy and the stock market moving, there'll be opportunities. You'll have 3, 4 stocks moving at the same time. You'll open a trade in one and it'll move up and it'll earn you a little bit of good amount of money. But that's not now. It ain't happening, especially for small accounts, especially under 2K. If you have $500, that's very tough. Kudos to there was somebody who left a comment for me the other on one of the recap videos, and they said they were trading on $100 account, and they had made 10 bucks, I think, or $70. They had $70 in their account. They had made $10 on the day that I lost a whole bunch of money with 2,000. So it is possible to make money with small accounts, but it is going to be small money, and you're going to be very limited, and you're going to have to really wait for that particular golden trade of the day to come to you, and that may not happen every week. So it varies. So you have to be careful. There are periods in the year that are patterns. There are lots of folks who do a lot of research, a lot more than I do, certainly. And you should always, if you're thinking of jumping in, or if you're thinking whether you should continue or not, then you need to seek out financial professional advice and let those folks advise you on what's good and what's bad. If the market continues the way it does and you've been read, you might want to take a break and wait to see if a bull period comes, and then you may try it at that point. The important thing about going into the market, the number one rule, everyone who has money and is looking to invest it in day trading should should put it at the top of their forehead is, if I put my money here, how safe is it? Am I going to lose it all? That's really important. So based on that, decide whether you want to put your money out there, and if you continue to lose, you might want to stop, because the market may not be for you, or at least day trading. You may be addicted, which now becomes all of a sudden a gambling problem. Mental state is very important. Heightened mental state is very important. By being emotional and wanting to click because the excitement of being in a trade really fills your dopamine, that's sort of crazy. You don't want to do those things. So we're going to look for the first quarter. I'm going to continue to trade. I'm looking to do better in January, have better recaps. I might start doing a lot more lives. Like I said, I got the website coming, and I'm also writing an application to trade, to track trades. I don't like the software that's out there right now. I'm looking for something that's a lot more simple for me. I've got a simple account. It is not over complex, and I'm looking for something to do that and also help me do the recaps, because I want to be able to flip 1, 2, 3 screens and show the folks on the recap video what I'm looking at based on charts, based on whatever trading I've done, and without having to do print screens, copy the screen, put it in something, massage it, look at this. It just takes a lot of time to do the recaps. And I feel that a live is very dry, even though it has interactivity and it has live voice, and certainly it's good for folks to watch. It's a lot difficult. I don't have enough subscribers to build a Discord, to build a community yet. I think I would wait until I hit 500 or 600 before I think about a Discord for folks. But I hope that that my journey brings value to some. I've already heard from a couple of people that they've gotten some value, other encouragement from others, and I thank you for that. I thank you for watching, and I thank you very much for subscribing. But it's a long, slow road. I'm not doing this to be monetized. I'm not doing this for anything but for my personal gain. And my personal gain is that I get to recap, review the videos, and as you get older, you realize, and I've realized that one of the best ways to learn more knowledge is to share it. So that's what I'm doing. I'm here in an experience and a challenge. I'm doing something that I think is worthwhile doing. I'll do it as long as I can, and then at the same time share it with you all. And if it helps me become a better person, to a better commentator, a better content creator, and learn more from it. I already have, and I think that it has been great value since I started doing this in July. So hopefully everyone had a great holiday. Everyone has a good Christmas and a good New Year's. And today is January 1st, 2026. And tomorrow, Friday, we'll be up to start looking at it. From what I see right now, it looks like it may be iffy tomorrow. So don't go overboard in your trading. Just be patient. Next week might be more of the same, and later in the week better. But then we have to wait probably until first quarter to make a decision whether we get a bull market this year or not. So thank you for watching, listening, and happy trading to everyone.